All right. Hi, everybody. Thank you for joining today's office hours. So, to try and keep this as efficient as possible, I've got myself, Sam Silverman, Mike Schoenfeld, and Ahmed Khan on our team. And I'm sure we're going to have some other people joining the webinar as joining the Zoom office hours as we go. So, what we'll do is we'll use the chat box to submit questions, and then we'll try and cover as many of them as we can, going down in order. But I think maybe to start, as people are kind of coming up with their questions, Ahmed, do you want to start and give us like a kind of 2-minute update on just where things are with the latest USCIS data and just kind of what we're seeing in the overall market today for investors looking for potential urban and rural projects?
Yeah, absolutely. So, yeah, thanks everyone for joining. If you're on the East Coast, I know it's a little bit late. If you're on the West Coast, you're probably just finishing up your work day. So we appreciate you guys coming here and sharing your questions. It helps us to provide feedback to investors, understand what kind of questions investors ask. If you go on our website, you'll see that we have a ton of educational materials, articles, videos, blogs, updates, etc., that really help to educate the market and just help people understand what the EB-5 process is like. So events like this really help us understand what investors are asking and what they're looking for. And so we can provide better materials that are more oriented towards what investors are looking for. In terms of what's going on in the EB-5 market, so if you're new to EB-5, welcome. This is a crazy time to be joining the EB-5 kind of industry, but EB-5 is essentially an investment-based visa program that has been around since 1990. And over the last 3 years, we have taken advantage of a rule called the Reform and Integrity Act. So this is a law that Congress passed about 3 years ago in March of 2022. And what it did was really clean up the program, make it a lot faster to gain approvals and green cards for investors. And it also made it just a lot more transparent for investors in terms of reporting, knowing who all the different parties are to these projects and developments that investors are investing into, and also providing just an avenue of oversight for different government bodies, including USCIS and the SEC. Um, what this has led to is thousands of people basically investing into the program. We have had just our company. We're one of the big regional centers that kind of oversees this program and puts together projects that are available for investment. And we've had well over 1,000 applicants just over the last 3 years. I think we're closer to like 1,500 at this point, who have invested through our projects, and a lot of them, closing in on 700, have already seen their petitions approved. And what this is doing is just continuing to drive demand upwards as more and more people are getting their green cards. People who filed a year or 2 years ago, their friends are seeing that. They're seeing them kind of getting out of the cycle of EB-2 retrogressions, if you're Indian or Chinese background, or just seeing if you're an entrepreneur from overseas, people getting their green cards very, very quickly and being able to move themselves and their families to the United States. And so the latest data that we've gotten from USCIS, what it shows is that demand has stayed pretty rock solid for the last 2.5 years. It's definitely trended kind of upward. Every month, we see more and more people kind of interested in the program. And then there are a couple of outlying months in basically March of every year where we've got a huge upward surge in filings. And that's largely due to external factors like President Trump's gold card announcement, or an increase in filing fees from USCIS. We saw those months show just a really big surge in filings. And so where we stand today is, it's not an unlimited number of green cards that are available through the EB-5 visa program. There's only about 10,000 available per year in the entire category. It ends up being a little bit more than that with carryover and trickle down, but we're not going to get into that unless someone specifically asks. It really, we're kind of running up against the wall at this point where two specific nationalities, people who are from China, mainland China, and from India, meaning that was the country where they were born, are now starting to see that there's enough applications that have been approved, enough green cards that are about to be issued, that people are expecting a little bit of a backlog or a retrogression. And so what that basically means is that you can still be approved in a very short period of time, but you may have a slight delay in obtaining the actual physical green card, sometimes 1 year, sometimes 2 years, all the way, for some nationalities, it may be even more. Um, I guess the good news is that currently the visa bulletin is still current. And that's a big advantage for investors who are looking into this program today. What it allows them to do is file their application while the visa bulletin is current and essentially get in line and get their adjustment of status application in, which gives them, if they're in the United States, sorry, gives them the ability to work and travel and essentially start their lives in the US while they're waiting for the green card to be adjudicated. Whether that takes 1 year, 2 years, 5 years, they're going to have work permission and travel authorization while they're inside the US. So yeah, that's a snapshot of where we are today. Mike, I don't know if you want to add anything to that, but definitely, guys, use the chat to ask questions, so we can definitely cover wide range of topics. I didn't even introduce myself, but I happen to be an immigration attorney as well. So if you've got some general immigration questions, we can probably cover that as well. And then, Mike, I'll let you introduce yourself and talk about your experience.
Perfect. Thanks, Ahmed. And yeah, everyone on here, please feel free to use the chat box, ask any questions, or unmute yourself. We're here to try and be as efficient as we can and answer the questions that you have. We know a lot about EB-5. We spend all of our days in the industry. So yeah, just let us know.
Yeah, I think one thing we should kind of talk generally about is the difference between urban projects and rural projects. So oftentimes we get a lot of questions from investors about what's the difference in the total cost, the timing. So on the cost side, there isn't any difference between high unemployment TEA projects and rural TEA projects. Everything's $800,000. And in terms of timing of getting the work and travel EAD combo card, we're not seeing any difference in the timing for the issuance of that either. Where there is going to be a difference is in the issuance of the physical green card. So with the rural projects getting priority processing, we're seeing a lot of approvals, over 80% of them within 12 months, based on our recently published data, over 600 approvals. Urban projects are taking a bit longer for approval, but the positive side for urban projects is the investment terms tend to be a bit shorter, a bit more favorable in terms of capital repayment. So what a lot of investors end up really deciding is what's the priority, what's more important. Is it getting the green card for family members a little bit faster, a year or two faster, or is it more important to get the capital back, the 800,000 in principal capital, to get that back a year or two faster? And usually that's kind of a good start before you go crazy and start reviewing 10 urban projects and 10 rural projects and really spend a lot of time on both. It's really good to kind of zoom out and just fundamentally what's more important, green card a little bit faster, capital back faster. And then once you've kind of made that initial decision, then focus in more specifically on rural projects or on urban projects after that.
Exactly. And one of the things that I always like to recommend to investors that are going through the process is it's most important to hire the immigration attorney early on. Quite often, the source of funds is much more complex than investors think, even those investors that have been living in the US for 10 years and all the income is sourced from the US. It's still a lot of documents and can easily take 1 to 2 months to assemble everything. So what I'd always suggest to investors is start the process with the attorney early on, even well before you choose the project, because that will almost always be the bottleneck in terms of getting your filing in, being able to adjust status, and moving forward from there.
Yep. So one of the questions we have is, can you talk about the process of becoming an accredited investor? Good question. So to join any EB-5 project, you have to qualify as an accredited investor. Those are the current laws under the SEC rules. And so what does that mean? In order to be a quote accredited investor, you have to meet certain criteria, either net worth or income. And so to do that, basically you can get a accreditation letter from an attorney or from a financial advisor or planner, basically confirming that you are accredited. And there's a number of different websites that provide that pretty economically. One of them that a lot of our clients use is called verifyinvestor.com. I'll put that in the chat. That's a popular one. It's only maybe like $100 to do that. And basically they review your tax return, they review, bank statements, things that show that you have either the income required to be accredited or the assets. And then that letter is typically provided to the EB-5 company that you'd be joining, to show that you are in fact accredited. Because EB-5 is a private security, it's not like a public stock like Google. You do have to qualify under the current laws as an accredited investor, but we rarely find that to be an issue for clients considering EB-5. The net worth requirement is $1 million, and the EB-5, investment is with attorneys' fees, filing fees, et cetera. It's over 800,000, so you're very close to the minimum $1 million net worth. So it usually isn't an issue for clients interested in pursuing EB-5.
And yeah, so I'd say great question there. So one of the other things is, this is a very timely Zoom meeting that we're having, is a lot of investors ask just how do you kind of choose the regional center and the project to go into? And earlier today, we just had the repayment of one of our earlier deals, our water club deal. We're going to be releasing that news probably tomorrow. But we had a $24.5 million loan repaid on time and in full today. So what I would say is, as you're evaluating different regional centers, it matters what the history is. So look at how many deals that group has done, what the success rate is, who the developers are that they're working with, but also understand that at the end of the day, you're choosing one project at one time, where past success doesn't necessarily mean future success. So you should absolutely do your diligence on the group that you're going to be working with and what they've done before, but also make sure that you also do your homework on what the actual project is that you're going into, and don't just trust, oh, this group has done 100 prior deals, I'm sure it'll be fine. Like, chances are that's right, but you should do your homework, because it's one deal that you're choosing, and that is the only thing that matters to you in the future, not the past success. So even though we celebrate our success, we're still very vigilant in the deals that we choose going forward.
So we've got another question about information on EB-5 loans. I assume that means like a loan that you'd borrow to fund part of an EB-5 investment. So let's start with the question that way. Ahmed, do you want to kind of answer that in the context of some of the recent USCIS activity we're seeing, and what potential sources for loans are going to be acceptable?
Yeah, absolutely. So the question is basically, are you allowed to take a loan for your EB-5 investment? Where can that loan originate from? And then are there different options in terms of repayment of that loan? Things like interest-only payments, or principal and interest, or different kind of terms around what the rate might be, et cetera. And the answer, quite simply, is that you can take debt. You can use debt to fund all or part of your EB-5 investment. So a question that we get often is like, okay, is there a limit on the amount of loan that I can take to fund my EB-5 investment? And the answer is technically no. Your whole $800,000 can come as a form of debt that you've acquired from an outside source to fund your EB-5 investment. Um, it can also be multiple loans. It can be, just one loan that's a small portion of the total investment amount. You could pretty much mix and match to meet your needs. The hard part then is basically the second question, which is where can you get these loans from? And what do the terms have to look like for USCS to find them acceptable? Let's start with where you can get these loans from. Pretty much at this point, there's only one source that you cannot get the loans from, and that is from the regional center themselves. If you're investing with a regional center and they're also the ones who are lending you the money, USCS looks at the cyclical nature of funds basically moving from the left pocket to the right pocket. And although they've approved that in the past, under this administration, they're tightening their adjudication standards. They're looking at things a little bit more closely, and they've taken a pretty harsh public policy stance against this practice. This is not the first time that USCS has changed their mind about specific practices, but this is something that we actually looked at the rules a long time ago and said that we're not going to provide loans to investors as a regional center because we felt that it did go against the nature of the program. So that is one thing that now has become prohibitive in terms of where you can get the loans from. If you have a regional center that's offering you loans to fund part or all of your EB-5 investment, that's a pretty big red flag, especially understanding what's going on right now with USCS adjudications. But if we step outside of that, it really does open up. There's a very famous case that you can look up called Zhang v. USCIS, and I'll put that in the chat as well. And this case basically asked that exact question. Where can these loans come from? In that particular situation, the investor had received a personal loan from a family member or family friend. I forget exactly which one. And they had used those funds to then make their EB-5 investment. And USCS argued like, oh, this is not really a loan. Like, why would anyone give someone a loan of this amount? Yada, yada, yada. And the court essentially said that that's not USCS's prerogative. USCS's only determination is whether, or should be, whether or not the funds that have been invested came from lawful sources. And if someone wants to give you a loan for $800,000, that's really between you and them. And so that kind of brings us to the third part of our analysis, which is, okay, well, what can this loan look like? And ultimately just understanding that, okay, it can come from a bank, it can come from a family member, it can come from a friend, it can come from, I don't know, a previous employer. All of those are acceptable kind of sources of the loan that you're taking to fund your investment. But they do have to follow two very specific rules. The first rule is the lawful source of funds is still very important. So you still have to be able to prove where those funds came from that were loaned to you. So an easy example, let's say you're getting a loan from a friend for $200,000. Your friend is going to then have to submit tax returns, bank statements. If they're getting, let's say, a line of credit that they're borrowing against, they're going to have to show the underlying asset that was used to collateralize that debt. They're going to have to show basically everything that shows that that $200,000 was lawfully sourced. Okay, so that's the first requirement. And then the second requirement, again, something that USCS has really cracked down on in recent years. If you're going to call it a loan, it needs to look like a loan. And the USCS has sent all kinds of RFEs around this point, everything from a federally mandated minimum interest rate, which is easily found on the IRS website for what interest rates should be, even for a hand loan that you're receiving from a friend. Reporting the loans on your taxes is a really popular way that USCS has started checking if this is actually being given as a loan. Are you providing collateral? Are you able to provide that collateral? Are you giving someone, a document that says, hey, you can have a note and it's secured by my home? Is that home free and clear for you to even provide? USCS is starting to dig deep into these personal loans and understanding, okay, is this really a loan or is this essentially a gift masquerading as a loan? So Those are two common pitfalls that I would definitely suggest working with an immigration attorney closely, and they will be able to structure this loan for you a lot of times, tell you how it should and should not look. But outside of that, yes, you can get a loan from pretty much anywhere, a bank, a financial institution, private lenders, friends, family, etc. But if it's like a private lender or a friend and family kind of loan, you got to be able to prove the source. And if you can't, let's say it's a private lender who's unwilling to share where they get their capital from, that's not going to be admissible for USCIS. Great question. Something that comes up a lot. Oh, another question that we get a lot often, like kind of relative to loans, is, oh, I heard I can take loans. Which banks give loans for EB-5 investments? And the answer is you can't just walk into like a Wells Fargo tomorrow and say, hey, I'd like to invest in EB-5 AN's Terracea project. Please give me a loan for $800,000. Here's my income. That's just not how it works. They're not going to. That would be essentially a margin loan. They're not going to give you a loan to then turn around and put it into an at-risk investment. So, unfortunately, you do have to have some kind of collateral if you're going to a major financial institution to get a loan. So, something like a HELOC, or even if you have stocks and things like that, you can. You can sometimes take a loan against those securities, or your stock portfolio overall. You can take a margin loan. There's a lot of creative ways to do it, but the best way to do it is probably talk to an immigration attorney, and they can walk you through your options.
And Ahmed, another question that we get pretty often is about adjusting status given the current position of the visa bulletin. Like, why is that possible now, and how is that probably going to change sometime in the future when, one or multiple categories become non-current?
Yeah, absolutely. So the first thing to understand is the visa bulletin. So if you just typed in visa bulletin into Google and looked at the chart that basically comes up, and we can already see November 2025's chart, so you can kind of look and see into the future almost. And what that will basically do is that chart tells you which visa categories are current. And current basically means there are enough green cards available for basically everyone who is applying in XYZ category. Okay. Now, not only is it kind of differentiated by categories, but it's also categorized by countries. And the reason for that is that every country gets a 7% allocation, if you will. So, for example, if there's 10,000 visas that are available in the EB-5 category, and each country gets 7% protection, then, for example, China will get 700 visas in any given year, specifically in the EB-5 category. India will get 770, and so on and so forth. So basically, what that does is it limits the amount of green cards that can be allocated to different nationalities in specific years. And so what happens is if enough people apply, you end up with what's called a backlog. And this essentially means, let's just say that the limit for India is 700 green cards that are available, and 1,400 people have been approved and are awaiting their green cards. What that would mean is that in 1 year, they're going to issue the first 700, and then there will be a 1 year delay, even though everyone is kind of approved in the same year, for the second 700, and they would get their green cards in the following fiscal year. And so that backlog, kind of what I'm giving you is an easy example with easy numbers, but you extrapolate that into hundreds of filings, thousands of green cards that need to be issued, and a very big game of, which country has how many applicants and who's going to kind of get to them first, who's going to get to the green cards first. So as of today, in the set aside categories, which were established by the Reform and Integrity Act of 2022, all countries are current. So you can file today, and there's a really big advantage for investors who are already in the US in pretty much any status. You could be here, in a visitor status. You can be here in like an F1 student status. You can be here on H1B, on an L1, on an E2. There's a lot of different statuses that will still possibly allow you to adjust. An adjustment basically means that while you're waiting for your green card, the government is giving you a secondary status in the US. So, for example, if you're an F1 student and you applied for the H-1B lottery and you weren't selected and you're in your final year of OPT and you're thinking about solutions, filing for an EB-5 will now give you a new status. And if you're inside the US, and you will also get a work permit and a travel permit. And that's going to last you up until the point that you get your green card. So whether it takes 1 year, 2 years, 5 years, 6 years to get your green card down the road, you will have that secondary status. You don't have to rely on going back to school or an employer or anyone sponsoring you. You're essentially self-sponsored at that point. You'll have general work authorization, which is as good as a green card in terms of work authorization. You'll be able to work anywhere. You'll be able to not work if you don't want to. You'll be able to start your own company. You'll be able to work multiple jobs. You'll be able to work a job while starting a company. Pretty much whatever it is that you want to do, you'll be able to do. And you'll also be able to travel and re-enter the US without a separate visa stamp. So, for example, if you're an Indian national and you don't want to go, like, let's say you're on H-1B and you don't want to have to go back to India and get stamping, um, you'll be able to kind of travel back to the US without getting a new visa stamp. And yes, Paul, I see you're asking the question about the current shutdown and whether the processing is affected by it. As of right now, we haven't seen any kind of delays or anything like that. Because USCIS, especially IPO, which is the Immigrant Investor Program Office, that basically is dictated or it's run by filing fees. So because people keep filing their applications with their filing fees, USCIS is funded through that. The government shutdown hasn't affected their ability to continue processing. So let me just finish the conversation about backlogs and what that will mean in the future, and then we'll jump to the next question. Um,
And
so
Ahmed, let's tie that quickly into an urban application and why urban makes sense, particularly for those already in the US who can adjust.
yeah, absolutely. So basically, and I guess that brings up some more stuff. So essentially, for any project that you're investing in today and for November as well, if you get your application in while the visa bulletin remains current for all countries, meaning they haven't reached their country limits, you're going to be able to put in that application for an adjustment of status, and you're going to be able to take advantage of that employment authorization, work authorization, travel authorization while you wait for your green card down the road. And so if you are so the two options that you have at your disposal are rural projects and high unemployment area projects. And Sam kind of alluded to the differences between the two. A rural project will get you faster processing and agree like kind of get you the approval very quickly, so you get in line for the green card very quickly. But rural projects by their nature also end up being a little bit longer. And so your green card, if there is a backlog, your green card might be slightly delayed and it's going to take longer for you to be able to get your money back. Not to say that that's necessarily a bad thing, but certainly you are prioritizing your green card at that point. High unemployment kind of offers a very interesting opportunity for investors, especially in our projects, because a lot of those projects have very favorable financial terms. Those projects are more plentiful. We're able to find more of them, and we're able to structure deals that are pretty much better for investors financially in the sense that not necessarily in terms of safety, but the term of the loans can be shorter. Often there's an opportunity for higher returns. Often it's a bigger developer or an area that you're more familiar with. There's a lot of different kind of intangible advantages to high unemployment area projects. And so if you're considering one of those projects, you like those projects, maybe you like the financial terms of those projects, you can basically invest into those, take advantage of those financial terms. And even if your green card, let's say, takes a little bit longer, if you're from a backlog country, or it's going to take the same amount of time if you're from a non-backlog country, that's okay. You're going to get those favorable financial terms, and you're going to be able to get that EAD, get that advanced parole, and essentially bridge the time that you're going to be waiting for your actual green card by being able to continue to work and live and do everything else in the US. So the window for that is closing, as Sam is alluding to. The more people that file, the more people that get approved, the more likely we are to end up in a scenario where the visa bulletin will retrogress. And once it does, you're not going to be able to file that concurrent filing if you're in the US, and you're going to be stuck waiting for that bulletin to become current, which could take years before you're able to file for that EAD and advanced parole. So just no time like the present. I feel like I've been talking a lot, but yeah. So we had two questions. One was about premium processing. There's no premium processing where you can like pay a fee and the government will process you within a set period of time. But rural projects, we see now 3 years of data incredibly faster than high unemployment area projects in terms of processing. Um, I think something like 80% of our investors have been approved in 12 months or less in the rural area, and 100% of our investors that are organically approved in the high unemployment area are taking longer than that, typically closer to about 16 to 18 months, if not longer. There's a definite advantage in terms of processing for rural projects, and it's written into the law. So the law does require USCIS to give rural applications priority. And by priority, basically, it just means they pick them up first. And then the other question is a much more difficult question, and one that you'll probably have to consult with an attorney, is how does the age out protection work? So we'll kind of give a little bit of background here. Child Status Protection Act is a law in the United States that basically helps people who are filing for their families. It helps for their kids to remain a part of the family application instead of aging out. And aging out basically just means a kid turns 21, the US government kind of considers them to be an adult and essentially separates them from the family. And so there are situations where the parents and maybe younger sub-siblings will be included and get their green cards. But then the elder child who's now turned over 21 is no longer protected. Okay. Um, what protections does EB-5 afford for those investors? Now, there's two schools of thought, and I'm going to give you both. And I think the question that you're asking is like, okay, let's presume that you have a 16-year-old and an 18-year-old in a family. What's the difference between the two? So, kind of the prevailing sentiment right now is that if you're able to file the application inside the US and file an adjustment of status concurrently, you have locked the child's age forever. If you look at the USCIS policy manual, there's literally an example given by USCIS of someone files concurrently. 3 months later, the visa bulletin backlogs, and USCIS states that they're going to use the date of filing as the date of calculation for what the child's age is. So, what the Child Status Protection Act does is it freezes a child's age at a different point, at a various point. Okay. So, one school of thought, which I think right now is a prevailing kind of idea amongst all immigration attorneys, is that you file that concurrent filing, kid's age is frozen forever. Now, there's a more conservative thought to this, and there's nothing wrong with looking at all the different variations, because until someone challenges this with USCIS, we're not going to have a definitive answer. And that is that when you file the application, the kid's age will be frozen. Okay, but it's not going to be frozen forever. Once your application is approved, if at that time the visa bulletin is now no longer current for you, the kid's age will then start aging again. So essentially, let's say you filed on your kid's 18th birthday and your application took 1 year to be approved. When the application is approved in the government's eyes, your kid's age is still 18. They haven't aged a day. Okay. But if the visa bulletin is not current, your kid will now turn 18 in 18 in 2 days, 18 in 3 days, and so on and so forth. And so you essentially have a 3 year buffer where the visa bulletin has to become current again, and that will lock your child's age. So kind of on the flip side of that, if let's say it took a year to be approved, same hypothetical, and on the date of your approval, the visa bulletin was actually current, your child's age is now locked forever. This is only a real issue for people who are from India and China in the EB-5 category. If you're from pretty much any other country, as long as you file your initial application, whether it's from overseas or inside the US, prior to your eldest kid turning 21, everyone will be included in the EB-5 application. So the deadline is a little bit different, unfortunately, if you're talking about a traditionally backlogged country, which for us is mainland China and India, versus pretty much every other nationality in the world.
Yep, perfect. Thanks, Ahmed. And another question that we often get is just about the current projects that we have and how to choose between them. So one of the ways that we're pretty unique is that we don't think that projects are one size fits all, and every investor is going to want the same project. Everyone has different priorities. Country of birth matters for the set asides. Processing speed matters to some people, rate of return, speed of return. So we really look at each project a little bit differently. And I'll just highlight what our most recent kind of popular project is, the Bay Creek project. We received our 956F approval very recently within the last couple of weeks on that project. And it's been popular because it's our shortest duration rural deal. It's a project in Virginia, right in Cape Charles, where the neighborhood's already been underway for many years. There's about 100 transactions of homes every year in the neighborhood. So it's a very established neighborhood. You could think of it where there's hundreds of homes already existing, many homes being built. And this is just a cheap source of capital for the development to continue. And I think Sam's pulled it up on the screen. So you can visit the site. So this has been our most popular rural deal lately because it does have a lot of those features that investors like, especially the shorter investment duration and having the 956F approval on the application. So we're happy to kind of speak more about that directly. And if you're interested, you can reach out and we'll share the documents. And that's on the rural side. And then we do have a couple deals on the typical high unemployment side, and I'll let Sam run through one or two of those projects.
Yep. Thanks, Mike. So again, rural projects are great. They're fast for investors, but sometimes investors prefer to get their funds back faster, and they're okay. Hold on, let me just turn this off. Okay, so as Mike was saying, rural projects are very popular because the primary goal for investors is to get their green card, but sometimes investors are seeking a faster return of their capital. And in that case, an urban project is going to be the better fit. So before the RIA, before 2022, the entire industry was focused almost exclusively on urban projects, right? Projects not located in rural areas. And so we have a lot of experience selecting those types of projects. Now, post RIA, post 2022, rural projects have gotten more popular, but we still also have a lot of urban projects that we have open and available as well. So on the urban side, currently our most popular project is our Terracea multifamily project by Coulter. Coulter is one of the largest private developers in the US. They've been in development for almost 30 years. They've done over 200 projects, $37 billion track record. Every project has been completed and they've never failed to repay a loan. We've been working on EB-5 projects with them since 2014, and we've done over 30 projects with them. Terracea multifamily is one of the newest projects that we have available with them. It's an apartment building in Florida, and we have two options available for investors. One is a debt option with a 3-year initial loan term, and also an equity option that has a significantly higher annual return of 5%. So the key difference with this project versus some of the rural projects that we have is just investment term. So 3 to 4 years is faster than, 5, 6 years. And so while investors are waiting longer for the green card because urban projects don't have the priority processing, they are still getting the work and travel permit in typically just a few months. And they would just be on that work and travel permit if they're already in the US for a bit longer, but they would be eligible to get their capital back, likely several years faster, because that project has just a shorter investment term. So it really comes down to thinking about, what's more important, green card faster, capital back faster, and as Mike mentioned earlier, just quality of developer. At the end of the day, the regional center is diligencing the project and the borrower. But the borrower, in this case, the Coulter Group, is the one who's actually taking on the loan, taking in the funds, and is ultimately responsible for repaying EB-5 investors. So when we look at projects, we're looking at borrower track record. How many times has the developer, in this case Coulter, how many times have they borrowed construction loans in the past for this type of project? Have they been able to execute successfully, build the building on time, rent it out, sell it, repay the money? And, how big is their balance sheet? Who's guaranteeing the loan? In this project, we have a parent company repayment guarantee. So even though funds are only being used in the Terracea project, the promise to repay the EB-5 funds is from a much larger diversified parent company. So all of these things kind of collectively combined reduce the risk for EB-5 investors who join the project and, where their funds are going and creating jobs. Ahmed, I'll let you jump in and share any thoughts you have as well on those two different options and kind of why investors prefer one versus the other.
Yeah, we've had quite a few investors choose both options, both debt and equity. Um, it kind of depends on the investor's profile. For a lot of our like investment banking or finance background investors, they really do like the Coulter equity deals. At the end of the day, you're talking about a developer with 30 years of track record. They're building, 50 plus story condo buildings in the same state as this 4 story apartment building. Is this the deal that they're all of a sudden going to just completely poop the bed? Probably not. But all that considered, if you look at the comps, which comparables, and kind of just look at the area and the population growth, there's a lot of intangibles that people like about these deals, and it's probably the same things that Coulter liked because I think it's really important to point out that we're not going to developers like Coulter and saying like, "Hey, please build this apartment building in Palmetto, Florida. Like, we think this will be a great project." Instead, it's the other way around. Coulter is building these projects with or without us. And essentially, what this offering is doing is giving EB-5 investors an opportunity to invest in what would normally just be an institutional offering for their EB-5 investment. And so, folks with the finance background and who are used to seeing these types of equity deals look at the terms, look at the underlying kind of comps, and just look at the deal overall and say, wow, this is a great deal. Why not go into EB-5, make a little bit of return, a 5% annualized IRR, and also get my green card in the process, right? So we talked about some of the give and take for EB-5. You're definitely going to give up a little bit in terms of immigration timing, but the advantage there is you get your principal back in a very short, relatively short period of time, and you get some return on that as well. 5% essentially, it's like a pretty good high yield savings account at this point. I don't even think most high yield savings account or money market accounts are paying that much anymore. But if you're very risk averse and you just want the benefit of getting your money back, your principal back sooner, then the loan portion of the stack is equally as attractive, right? If you just want to stay risk averse, I like to say, if my mom came to me and she said, "Hey, I just want to be put into a project very, very safe. I don't want to have to worry about it. I don't want to have to, stay up at night." That's where the debt portion of most capital stacks will come in. And again, when you're working with a big developer like Coulter, who's got a great track record as a borrower, has 30 years of experience, never failed to repay a loan, you're collateralized additionally with a repayment guarantee against a big guarantor with hundreds of millions of dollars of equity on its balance sheet, you're in a really, really good spot to make sure that your money gets paid back. And I would even say that sometimes the numbers look a little silly when you look at Terracia alone, and you've got like a $16 million loan backed by $300 million of net equity in a Coulter guarantor entity. So yeah, we've had a lot of investors who have liked both offerings. I think in recent days, a lot of investors have kind of come to terms, if they're from India or China, and said, okay, we're probably going to have a backlog either way. Um, may as well get a financial benefit out of this. So if I'm waiting, 5 years for my green card or 3 years, either way, it's not tomorrow. Might as well get my money back as quickly as possible. And the Terracia project is a really, really good institutional level deal that allows for that kind of advantage.
Perfect. All right. Thanks, Ahmed. All right. So I don't think we have any more written questions in the chat, but in the chat, I just shared our individual call booking link. So should any other questions come up, or if you want to talk to me or Ahmed individually about immigration attorney recommendations, or compare our projects versus another project that you've seen in the market, or compare, rural versus urban generally, please feel free to schedule a call at a time that works for you, and we can jump on the phone and kind of address things individually and walk you through anything that isn't clear. And you can also explore our website. We've got hundreds and hundreds of articles, YouTube channel with over 1,000 videos that you can take a look through and get more details about any of our projects. So thank you for taking the time to join us on our first office hours. And yeah, we hope to hear from you in the future.
Yeah, look forward to hearing from some of you guys or all of you guys in the very near future. If you have specific questions, specifically about immigration, how it relates to your specific case, different source of funds issues. Like I said earlier in the call, I am an immigration attorney by trade. I've worked at some of the biggest law firms in the EB-5 space, and you can kind of use and abuse me to get a free consultation to learn more about what sources of funds might work for your situation, or interesting strategies that you might employ that we've seen in the past that have been successful. So use the link that Sam put in the chat to schedule a call, and either I or someone from our team will definitely be able to reach out and speak with you and answer any of your questions. Thank you guys so much.
Thanks again, everyone.
Yep. Thank you, everybody.
Have a great night.